Assalamualaikum and hi. My name is Fakhrul Amin bin Muhammad Hardi.
I am Muhammad Fitri bin Hussein.
Today we would like to present about accuracy assertion.
What's audit assertion? Audit assertion are claimed by the management in their financial statement. This claim may be implicit or explicit. It is the responsibility of the management to provide the financial statement to external auditor. They present certain information in this financial statement. This information is carry both explicit and implicit meaning. This is what we call the audit assertion. Management want to tell the auditor that their revenue as well as expenses occur actually and are complete, accurate, properly classified and recorded in the correct period. Similarly, they also have certain audit assertion about the balance sheet and disclosure. We are going to cover each of them. In preparing financial statement, management is making implicit or explicit claim. For example, assertion regarding the recognition, measurement and presentation of asset, liability, equity, income, expenses and disclosure in accordance with the applicable financial reporting framework. For example, is IFRS. For example, if a balance sheet of the entity show building which carrying amount of 10 million, the auditor shall assume that the management has claimed that first, the building recognized in the balance sheet at the period of end. Second, the entity own or control thus building. Third, the building are value accurate in accordance with the measurement basis. Fourth, all building owned and controlled by the entity are included with the carrying amount of 10 million. What are the five of audit assertion? The five audit assertion are first, accuracy, second, completeness, third, accuracy, fourth, classification and cut off. But for our group, we need to explain only for the accuracy assertion. First is accuracy. What is mean accuracy? Accuracy is assertion that all the transaction or event are recorded with the appropriate amount. A transaction is considered accurate if first, there is no error while preparing the supporting document, and second is there is no error while posting this transaction. For example of accuracy assertion is considering this example which is sale of 5,000 in ABC company. How will you test the accuracy? This is pretty much simple as we need to perform the following step. First, select sample of entry from the sale ledger. Second, recalculating the amount on the sale invoice. And third is check whether the control account reconciliation are in the place.
Okay, for another assertions example relating to class of transaction which is salaries and wages cost. For the accuracy assertions, the explanation is transactions have been recorded accurately at their appropriate amounts. Salaries and wages cost has been calculated accurately. Any adjustments such as tax deduction at source have been correctly reconciled and accounted for. Then, for another transaction, example of transaction assertion for accuracy. Okay, accuracy. There have been no errors while preparing documents or in posting transaction to ledgers. The reference to disclosure being appropriately measured and described means that the figures and explanation are not misstated. This is for the accuracy assertion for the another transaction. transaction for the financial statement. Okay, the next example is financial statement assertion for the accuracy and valuation assertion. The assertion of accuracy and valuation is the statement that all figures presented in a financial statement are accurate and based on proper valuation of assets, liabilities, and equity balance. For example, the assertion of accurate valuation regarding inventory states that inventory is valued in accordance with the International Accounting Standard Board's guidelines, which requires inventory to be valued at the lower figure of either cost or net realizable value. The financial assertion of accuracy and valuation states that the different components of a financial statement, such as assets, liabilities, revenues, and expenses, have all been properly classified within the statement. Next, for the account balance assertion, for another example, the accuracy, valuation, and allocation assertions means that amounts at which assets, liabilities, and equity interests are valued, recorded, and disclosed are all appropriate. The reference to allocation refers to matters such as the inclusion of appropriate overhead amounts into inventory valuation. That is for the accuracy, valuation, and allocation assertions. For the account balance example. Next, profit and loss assertion example. What is written in the profit and loss statement? Suppose NHIRKM Engineers has made sales worth 40,000 in the period ending 31 December 2020. What does management want to tell us? The sales worth 40,000 actually occurred. Second, all the sales are recorded in the profit and loss, so it's complete. All the sales are valued at an accurate amount. NHIRKM Engineers has classified all the transactions related to sales only and only in the sales category. 5. All the sales of 40,000 pertain to the current period, which is 2020. How will we test these claims? Accountant will define each profit and loss assertion and will conduct the relevant test to test the audit assertion. And then, how will we test profit and loss assertion in the above example? Okay, for the accuracy audit assertions, do we know that the definition of accuracy assertion that all the transaction events are recorded with the appropriate amount. The relevant test for this assertion is select a sample of entries from sales ledger, recalculate the amount on sales invoice, and check whether NHIRKM engineers reconcile the balance of individual ledger accounts with control accounts. Then that is for the profit and loss assertion example. Then, what are the audit assertion for expenses? The audit assertion for expenses are completeness, accuracy, classification, occurrence, and cut-off. As expenses relate to the profit and loss statement, so audit assertion for expenses are the same as profit and loss statement assertions. What are audit assertion for revenue? Audit assertion for revenue are classification, cut-off, occurrence, completeness, accuracy. Did you notice? I just rearranged the sequence of these 5 audit assertions, revenue as well as expenses, relate to profit and loss statement. So, they both have the same 5 audit assertion as a profit and loss statement. Okay, next, assertion about presentation and disclosure. Example, for the accuracy and valuation assertions, it's mean all the disclosure have been made at the appropriate or correct amount for the presentation and disclosure.
Purpose and importance of assertion. Assertion is the auditor in considering a wide range of issues that are relevant to the authenticity of financial statement. The consideration of the management assertion during the various stage of audit help to reduce the audit risk.
I think that's all from me. Thank you.